we were just talking about these sort of distinct and coincident realities that you're seeing. One is that you see people out of work, you see airplanes parked on runways, you see restaurants shut down. The other is you see the market hitting new highs and doing consistently that week after week. I think that what you have to do, A, is stay invested. Think about all the reasons that we didn't want to be invested since late February and what you would have missed in doing that, which is basically 2/3 of the rally that we've experienced over the last 6 months in this fastest ever retracing. The other thing that we have to understand is we have to get comfortable being uncomfortable, right? That is the advice that I give people who are, trying to grow in their career. And I think that is what's guiding investment decisions. We are in a period of extraordinary financial repression. Rates are being kept very low by an uneconomic buyer, which is the Fed. That is making the risk premium between equities and bonds grow. It is also continuing to make fixed income look much less interesting relative to stocks. And so you have to stay there. You have to ride the laggards. We've talked about what hits new highs over and over, and we have to wait and hope for breadth, which we're starting to see. Bob Pisani talked about that, and for themes like in biotech, like 5G to play out going forward.
Liz, let me turn back to you. One of the things that I found interesting in my notes is that you believe that Europe and Asia may bounce back economically quicker than the United States, and you say make sure that you are not cutting out of those areas, but rather maybe lagging into them. Do I have you right there?
You do. And what I mean by that is I think for the last 3 to 5 years, a lot of investors have been structurally underweight Europe and emerging markets because they've been disappointing from a performance standpoint. So that's understandable. But as we move through this recovery, if we believe that it's a global recovery, which we do, we see Asia coming out of that fastest, and then we see Europe not trailing far behind. So you want to make sure that you have exposure to that as their equity markets can start to close the gap between large cap U.S. stocks and the rest of it. So you want to make sure as an investor that if you've had a strategic underweight, maybe reevaluate that. I think this is an okay time to take some gains in technology, some of those big tech stocks. I wouldn't rotate out of technology. I still think that it's a great long-term play, but it's okay to take some gains in tech and redeploy it maybe into some of those areas that you've been underweight. Or if you have cash on the sidelines, which we know there's still a lot of cash on the sidelines, there's going to be probably a flood into some of the things that, from a valuation perspective, look more attractive than large cap U.S. stocks.